So hello, it's Keane Toomey again for EC5104 Applied Portfolio Management, week 11. So we're almost there. So we've still a bit to do, however, in the module, and this week we're going to have two more classes on Tuesday and Friday. So effectively there's no guest speaker this time around. So Tuesday, first of all, what we're going to look at is we're going to look at fixed income portfolio management. So Rebecca Brady from AccuVest on Friday mentioned a little bit about obviously the challenges surrounding fixed income at the moment with very low interest rates. So we talk a little bit about that and what it means for investors. We talk a little bit about the conventional tools that fixed income portfolio managers use, both on the passive and on the active side. To that end, actually, just in terms of fixed income, obviously one of the things that a lot of investors would look at are basically spreads between high risk assets and lower risk assets, or basically default risk. Or else, of course, spreads, say, within the Eurozone, for example, between the core countries like Germany and France and the periphery such as Portugal, Italy, Spain, Greece, etc. And to that end, I suppose one thing that I would advise you to have a look at this week, and I'm going to send a link to you today, is about the ECB's meeting on Thursday. So again, if you are thinking about putting in fixed income into your project portfolio, just something to bear in mind a little bit about what might happen on Thursday and how it might impact on Eurozone bond yields. So the other thing we're going to look at then this week is the final assessment. As mentioned last week, I'm going to hand out the final assessment. It's going to be a take-home assessment with a number of questions to look at. And what I'm going to do on Friday is a couple of things. I'm going to look at that questions in more detail. And I'm going to start talking a little bit about how you analyze also alternatives. So that will be covered on Friday. Effectively, we're not going to cover alternatives in huge detail, but I thought it would be worth just quickly looking at some of those, including absolute returns, hedge funds, private equity, commodities, and so forth, gold, and even Bitcoin, if anyone is interested in that. Again, the world of alternatives is huge. You'd have to spend quite a lot of time on all of them to try to understand, obviously, the pros and cons of using them in a given portfolio. But again, just talk a little bit about both the general nature of alternatives and what people are looking at when they're thinking about alternatives. Again, as Rebecca mentioned, some, like endowment funds, for example, that we will look at again this week, basically trade liquidity for higher returns, and that's one option. And then you've also got, for example, sovereign wealth funds, which we'll also briefly look at this week. They have a different, I suppose, objective. So really, with that world of alternatives, a lot depends on what your client mandate is, what your investment objective is, and so on. So with that in mind, obviously you're going to be working on your project this week again. So I will endeavour to get in touch with all the groups again this week. So I'll be sending out that email later today. Thanks very much.